Hello, everyone. Angelique Soto here from Credit Snitch, the unqualified buyer's pipeline. Today, you are tuning in to the Smart Consumer Podcast. I have some really great guests. We're discussing debt to income ratio issues. Now, let me say, my credit restoration company helps people far and wide. And the one issue I'm noticing that keeps popping up is debt to income issues. I have two knowledgeable people in this area who can help you understand how to get out of debt to income ratio issues. Please introduce yourselves.
I am Cisse. I'm the managing partner of Excel Financial and Tax Services. I am a wealth management advisor and an accountant.
Rob?
And my name is Rob Seiler. I'm a branch manager for Cross Country Mortgage. I've been doing mortgages since 2005. I've helped thousands of families overcome this issue. And I personally closed over $1 billion worth of mortgage transactions. I'm very experienced in this matter.
Boom. And I love that. So now that we've dropped our credentials, we're going to drop some knowledge. I spoke to you over a week ago about debt to income ratio issues that a lot of my clients are encountering. I sent you one client who was an investor, had 3 properties and couldn't access the equity because her credit score was low. She was at 90% utilization. I keep telling everyone the rule of thumb is to stay under 30%. That has now dropped to 15%. So if you're using your credit cards above that, you better be careful because your score is going to drop dramatically. And one late payment will bring down a credit score up to 120 points, and then you're dead in the water. So please protect your credit scores because this is a huge issue. Could you talk more about how we can help clients in those situations?
Yeah, so we have several different products that we have access to at Cross Country. For people that have low credit scores but need to access equity in their house, we would look at a home equity loan. This is different than a home equity line of credit. A loan is where all the money is dispersed to you at closing, and then you make monthly payments. A line of credit is where you have, just like a big credit card, you draw from it, pay it back, and then you can reuse it. But we would do a home equity loan, and they allow for lower credit scores, and they allow for also different types of income documentation. So if you don't have the traditional verification like tax returns or W-2s, you can use alternative verification forms like 1099s or bank statements, or even a profit and loss from somebody at a tax office. The big important thing is I can overcome a lower credit score, but it's very difficult to overcome late payments. You gotta do it before you become 30 days late or more.
Boom.
Because once you do that, it makes my job very, very hard. But if you have equity, your credit score is lower, and you may not have the traditional forms of verification of income. We can help you.
That's wonderful. So you guys heard it from the man himself. Put those auto payments on 7 days before the due date and stay on top of it because one late payment will sink your credit score up to 120 points. Now, I have Cisse here, and I wanted to talk about what if some of our clients have 401ks or 403bs?
Mm-hmm.
I hear there's a way to borrow, get loans. Could you explain a little more about that?
Yes, correct. For 401ks, for example, 401ks allow loans. If you have a 401k, let's say about 10,000,
Yeah.
you have full access to that 10,000. You can borrow it and repay yourself over time. And it doesn't count against your credit score. If you have a higher balance in your 401k, you can borrow up to 50,000.
That's excellent.
Yes.
Game changing.
Game changing, and pay off debt, do what you have to do, and bring that debt to income ratio lower.
How are the interest payments on that?
It's usually lower than traditional interest rates.
Boom.
What's nice about that is, as a lender, when you're taking a loan like that, we don't count that against you in your debt to income ratio. So you can actually pull that out.
And another one is Roth IRAs.
Let's talk about it, girl.
So when you take money out of a Roth IRA, technically, the money you put in a Roth IRA, it's with after tax dollars. Technically, the money you take from a Roth IRA, it is after tax dollars, which means even if you take money out of a Roth IRA before 5 years or before 59 and a half, what's penalized is the earnings at 10%. So the money you put in is not penalized. If you take money out of your Roth IRA, you can use that too and pay down debt.
That's fabulous. Are you guys hearing this? We're dropping jewels. Prepare yourselves.
There's more.
Please.
Yes.
Give me
Cash
another
value-
scenario.
Cash value life insurance.
Boom.
That
You
is
guys know
something
about
else.
that. That's the one that everyone keeps talking about on TikTok, IG that you could borrow against. Put us on.
Correct. So cash value life insurance, when you're making those premium payments, yes, sometimes you can complain it's high, but there's literally money inside of those policies that you can borrow against. Doesn't show in credit report. It's your own money because the insurance company is using that as a collateral and give you money. So you can use that any way you see fit, and it doesn't really count against you.
That's
when you take that
amazing.
money out.
So,
That's another way.
okay, so I went into Airbnb and I started closing some of my locations because it was becoming a bit much for me. But what I loved is that I got a cash value life insurance policy before I went into investing. And had it not been for that, I wouldn't have been prepared for the unforeseen costs. And I thank God that I set that up first. What I'm realizing, a lot of investors are not thinking about that. So you need to set yourself up with a safety net like a whole life insurance policy, cash value,
Cash value.
and use that to your advantage if you don't have a 401k. This is a game changer. And could you share more about how they could go about setting up a cash value whole life insurance policy? Because not every whole life insurance policy is treated equally.
That is correct. So you have several types of permanent policies or cash value policies. So you just need to talk to a professional like myself because I do that, and I will find out the best one that suits your needs.
Okay, so how
we
can
have like index universal lives, we have whole life policies, and whole life is just a type of permanent policy.
okay,
It's not the name of the platform itself.
okay.
So sometimes people kind of confuse permanent policy with whole life, which is the name of the product.
That's so
Yes.
funny. Where could
Take care of
people
that.
reach you at?
Phone number is 844-643-9235.
And what is your website?
www.financialandtax.com.
That's excellent. If you want to understand how to set up an insurance policy, definitely reach out to Cisse. And I want to go back into, are there more products that maybe you're not talking about? Because I hear about this non-QM. Can we get into that?
Yeah, absolutely. I'd love to. So non-QM stands for non-qualified mortgage, and it's for people that have a little bit different scenario than maybe Fannie Mae or Freddie Mac like. So again, it allows for alternative income documentation. For instance, bank statement loans, where we take your bank statements, we add up your deposits, and we can either be personal bank statements or business bank statements, and that's your income. We have the P&L loan, where we look at a profit and loss statement, and that's your income. We have 1099 programs,
Boom.
where all we do is look at your 1099. If you do a traditional loan, they're going to look at your tax returns. They're going to take all your deductions out of that, and that would be your qualifying income. But with this program, we look at your 1099. We don't look at the tax returns.
How many years in 1099 will qualify?
2 years.
2 years.
2
Okay,
years.
that's excellent. 2 years, guys.
Yeah. We also have an asset-based loan where if you have 1.25% of the loan amount after closing, then you'll qualify. So for instance, if you're getting a $100,000 loan after your down payment, if you've got $125,000 left, you will qualify. Now,
Mm.
these non-QM loans, there are a little bit higher fees and a little bit higher rates associated with these because there's more risk.
Yeah.
So they price that in accordingly, but it allows people to own real estate. And last time I checked, real estate's still a great investment. And
Right.
so that's really what I talk to people about when I talk to them is let's talk about owning real estate and how good of an investment that is.
Absolutely.
And so that's what we use them for. Non-QM business is up 80% year over year. So more and more people are using them.
Love it.
At Cross Country, we have our own line of non-QM products. It's called the Cross Country Signature Line. What's nice about that is our underwriters underwrite it. So we're not brokering it out to somebody else where we don't know them or we don't have a relationship with them. Our underwriters underwrite it, which means fast underwriting, clear communication,
Awesome.
and on-time closing. So we can close a bank statement loan or one of these loans just as fast as we could close a normal conventional loan.
What time frame would that be for the people who are new to this?
20 days.
Oh, money in your bank.
And that'll help you get your offers accepted.
That's
when you're making
awesome.
offers out there on properties, typically the faster you can close, the better chance that you'll have of winning the offer. Sometimes you're running into sellers that don't want to close fast, but that's an easy problem to solve. So that's really the difference between cross country and everybody else. Is we have our own line, we underwrite it, we control the timeline.
Fabulous. My next conversation, and we've run into this issue too, and I've spoken to you about it, foreign internationals.
I work with a lot of foreign internationals. So when we talk foreign internationals, I think either permanent resident or a non-permanent resident. And, do you have a green card or not? If you don't have a green card, then I'm going to ask you, what type of visa are you here on? And if it's, an employment authorization, EAD card, or there's specific types of visas that will allow for traditional financing. But if your visa is temporary or like a travel visa, then we do have a foreign international program where all we do is look at the projected rental income on the property. And if that equals the mortgage payment, you'll qualify. This is for people that are non-permanents on travel visas that want to buy an investment property. It allows them to buy real estate in the United States. If you are here on like a work visa, we can do a traditional loan for you. And so you can put down 5%. There's so many different visa types that there's a chart that I have that I look at. So I ask somebody, what visa are you here on? I pull up the chart. If it's eligible, we're good. If it's not, then we have to look at the alternative to where we look at like an investment property.
And this is not I-10. This is them having a Social Security?
Yes.
Okay, awesome.
But we do offer I-10 loans as well. So if you do have a tax ID number and you have to have somewhat of a down payment, 10 to 20%.
Okay.
But that would be a non-QM loan that we could do. It's an I-10 program.
Nice. Let's talk about it. Come on.
Yeah. So, I mean,
spit it out.
A lot of people are I've run into a lot of cases where, somebody may not necessarily be here legally. But they have a tax ID number and they're paying taxes.
Yeah.
And so there's lenders out there that will look at that and say, okay, this person's being financially responsible. They're paying their taxes. We'll give them a loan. And so we have access to those lenders and we will give them a loan if they qualify as far as debt to income. So
love it. Love it.
Again, the down payment requirement's a little bit more on these because there's just a little bit more risk.
Yeah.
But we can make those people homeowners and we can get them a home for them and their family, which is what's important.
Excellent.
Now, for the Social Security part, I know a lot of foreign internationals with a social do not have a credit profile. So tell me about that for you, because I've got something to say.
Yeah. So me and you ran into the scenario a few months ago. We had a customer that was moving and they had a social. They had a job here and they had a green card, but they had no credit. And so they were looking to buy a house that was roughly $1 million and they were going to do a jumbo loan. Everything was great with this customer, but they had no credit. Because they had no credit, that severely hampers what I can offer this customer because they want a jumbo loan with no credit. And so really, the only option was to do the DSCR loan, which includes higher rates and fees. Now, had they had credit, I could have got them a traditional loan at a major bank. But if you want a big loan like that, you need to have credit.
Absolutely.
And so this person didn't have credit. The only option we had was the DSCR loan. So they had to take a little bit higher rate until they did get credit. And then we refinanced them. We agreed to waive all our lender fees and pay for the appraisal as part of it.
I remember this.
It could have saved them some money.
Yes. And let me add, this was a teachable moment for both of us because he had no idea that I could build a credit profile in 4 to 5 months. So that foreign international, if they were patient, they could have saved a lot of money on that purchase. So once we figured out that we had a solution both ways, it was exciting. So if you're a foreign international and you don't have a credit profile, and you want to save on that purchase, I'm going to encourage you to reach out to Credit Snitch because we can create your credit profile in as little as 4 to 5 months. And that's powerful. How much could they potentially save by doing it that way?
On a large loan like that, you're talking tens of thousands of dollars in interest and in fees, a combination of the two. I think the big important teaching moment for us was planning. You have to plan. The best execution is not calling me a week before you want to make an offer. Right. If you're coming here, you have no credit. The solution would be call me 4 or 5 months or even really 6 months before you're planning on moving here.
Agreed.
That way we can get a plan and get you in the best position possible.
That's what I love about working with you and other realtors, the planning process. People just, it seems like a lot of people just wake up one day and they want to purchase a home.
That's right.
It doesn't work that way.
No.
You need to plan. There's money that needs to be saved. Is your credit score where you need it to be? Do you need to work on that? And then they start house shopping and falling in love with homes that they can't qualify for. And then they discourage themselves. It's a vicious cycle of disappointment. I want to prepare a lot of our consumers to be realistic about your home buying process. Plan. And you have a team who is understanding to that. If you have credit challenges, it's okay. Our team understands. I do that part. I'm the master in that. And we do that on a regular basis.
I don't ever tell anybody no. I say not yet. So,
Exactly.
even if you're not in the position right now, I will put you on a plan. I'll work with Angelique and we'll figure it out because there is a plan for you to be a homeowner. With that being said, don't buy a car before you buy a house.
Boom!
That's
Can we get like exclamation points or like a horn for that? We're going to say this a million times over and it's said in my literature. Why?
Because it's a depreciating asset. It affects your debt to income ratio heavily. The second biggest expense that you have typically is a car. I see it so many times. People buy a car before they buy a house and they're making $60,000 a year or $50,000 a year and their payment's $700
Oh
or
my
whatever
God.
it is. And they can't buy a house because of it. I'm like, congratulations, you bought a car before you bought a house and now you can't buy a house.
It's an investment property on wheels.
Yeah.
Talk about depreciation because you're the money lady.
And that car, when you look at clients' balance sheets, it's there. The first year, let's say you buy a car for 60,000. The loan is 50,000. Next year, it is not that much. So your loan value is more than the asset value. So that's kind of
Crazy.
Right. So it's not a smart move.
And what I'm going to say, and I'm sorry that I'm referring to it as crazy. I'm in no way trying to make fun of people who have done it because I've been in that position. But when you don't know, you don't know. And now that you know, you shall do better, right?
Yes.
Yeah. And I think that's the big thing is people don't think that far ahead. They just
No.
know they need a car. If you're just entering the workforce, get yourself a car that gets you from A to B. You don't need something nice.
Hoopty.
Yeah.
Word of the day. Get yourself a hoopty or a get around car. The El Segundo. How else should I put it?
And then once you buy a house
Yeah.
and you know what your expenses are going to be, then you can budget and buy the car that you can afford.
Absolutely. When he says buy a used car, he's talking about a payment of no more than maybe $250
Right.
a month. And that doesn't exist in this climate. I don't know anyone who has a car note at that price who has recently purchased new cars. Let me say that. But if you get a used car, you have a stronger chance of meeting that price point for your car note.
100%.
And we strongly advise it. So what do you have to say to people who are my age in their late 40s and they buy a brand new car for $40,000? Is that the right thing to do? Do you they have the house, they have everything, right?
Well, if you have money in the bank, there's no problem.
Okay. But if you're just coasting.
Paycheck to paycheck, do not do it. Nope.
Yeah, because the depreciation is great.
Right.
And people are getting caught up in the hype of, look at my wheels. I got the new BMW, the new Mercedes, I'm flossing. And there's no knock to the people who are blessed to be able to accomplish that for themselves. But when you're trying to create financial stability and generational wealth in your household and in your bloodline, you should not be making purchases like that, especially if you don't own a home.
Yeah.
Correct.
So, and Cisa also offers financial advisor services. She's helped me so much in my business to understand cash flow and operating costs. You have been a wealth of knowledge to me on the business level as my sister, as a woman in business empowerment. Rob, words can't explain how much I appreciate you as well. You have added so much value to me, and however I can do that, I will always. Do know that, both of you. Do we have any additional things to add before we close out our podcast?
For that down payment, I know when you want to buy a house, you have to have some cash set aside, right? So it's going to take about 6 months to get. So you can put that somewhere where it's generate interest
Yes.
instead of just sitting in a traditional saving collective.
Nice. So you're talking about a high interest bearing account.
Yes.
What are some of those that you could recommend to our listeners right now?
I cannot because of my license.
Okay.
That will be like a direct recommendation.
Okay.
But there's plenty.
There's plenty.
Yes.
They could call you to find out
Yes.
what that is.
Yes. Because
Boom. Just call her.
How can people get in contact with you?
You can go to my website. It's my name, robertseiler.com. They can also text or give me a call. My cell phone number is 614-402-8374. And call me, text me.
And is this all over the US or?
Yeah, I'm licensed all over the United States. So I help people all over the US. My email is robert.seiler@ccm.com. CCM like cross country mortgage.
Awesome. So if we don't have anything else to add, because I think this was an amazing discussion, my people, I know you're loving me right now because I'm loving myself. We're offering solutions and empowering people, and nothing makes me happier. So there's my positive karma for the day, and you guys as well. Bravo. If you have any questions or you need help with your credit or even in your business credit, reach out to your girl because you know mama loves to see people win. Have a great day. CreditSnitch.com.